Hello traders, welcome back. Welcome to Forex Mechanics. In this video, we are going to be discussing about the RSI indicator. I'm sure every trader has used indicators like MACD, moving averages, RSI, and RSI is an indicator that even I personally use. In this video, I just want to talk about the way I like to use the RSI indicator. And I've also seen that, typically a lot of traders like to use RSI with the standard setting of 70-30. While I understand that the setting is good, but I just sometimes feel that it could actually not work in your favor, especially when you are not identifying strong trends. Because according to me, RSI is simply an indicator which is following price, right? So this is the standard template that I use for my own trading. Here I have the currency strength meter indicator which I use, which tracks the two currencies that are involved. In this case, it is the euro yen. We will discuss about the yen movement in this month, which is December of 23. Of course, the year is coming to an end. And here you can see that I have a standard RSI, which is available on MetaTrader. In fact, all softwares have RSI indicator with the standard 70 being an overbought area and 30 being an oversold area. At least that is the interpretation that you generally find online and in most of the videos or articles. Now, I personally don't like to use it that way. One reason being is that typically the understanding is that when RSI is going above 70, then you're looking to sell, and when it is going below the 30, you're looking to buy, right? So 30, below 30 is an oversold area, above 70 is an overbought area. Now, in my screen, I have two RSIs. Now, this one is a multi-time frame RSI indicator. This is not something that I've coded. Let me clarify that. This is available online. You can look up for MTF RSI, where you can track multiple time frame RSI, on the same time frame. Now, typically, I track the market on the H1 time frame, but of course, I like to see what is happening on the H4 and the daily time frame. So this gives you a very clear indication of what is happening. And here you can see that the H4 and daily obviously is trading below the 40 level. That is the level that I personally like to use, which we can discuss in some other video. But in this video, we'll simply look at RSI, right? So what happens is that I'll give you an example of this month, where this is the month where everybody was focusing on this is where the month started. This is 1st of December, and our focus was on yen. The reason being, yen was in a trend, right? So basically all yen pairs were going down. If I have to show you a yen index chart, this is how the yen index chart looks like. So this is 1st of December right here, and right here is 1st of December. And in a few trading sessions, we had kind of realized that yen is going to be gaining in value. So this is the indicator I use, wherein I come to know that which currency is gaining in value. Here you can see right from monthly to weekly to the daily, it is the yen which was gaining in value. On the flip side, there was dollar which was weakening. But at least when the month started, it was the yen. And here, if you look at the monthly time frame, you can clearly see that this month has been a very clear month for yen. And you can also see on the H1 chart that there has been a very clear downtrend on the yen. And hence, we are looking at shorting the yen pairs. So for me, like in all my videos on the channel, I keep stressing on how important it is to identify which currency is moving the market, because that's how you identify a specific trend. So for me, RSI really makes a lot of sense, especially the typical interpretation where if it is below 30, you can look at buy, or whether it's above 70, look for sell. In this case, when I had already identified that euro yen especially was in a downtrend, so I can look at going short on euro yen once it's touching the 70, only when I've identified that it's a downtrend. So in a downtrend, probably I can look for short entries when RSI goes above 70. And on the flip side, when it is a strong uptrend, then every time price goes below 30, I could look for a buy entry. That is the way I would like to use RSI, because in this example here, you can see this is the 1st of December, And had you been looking for a buy entry, right, when RSI gets oversold, you can see here when RSI got oversold right here, you can see if somebody is looking to buy, right, this is the day when, had you, if you did not have any stop loss, then you would literally blow up your account, because on the 7th of December, yen had all yen pairs crashed, and there was a very clear move of around 300-400 pips, right? So for me, because I am using my indicator which tells me which is the currency that I should be focusing on, so my focus was very clear that I will be focusing on yen. So, and when the month had started, I had clearly seen there was pairs like euro yen, pound yen, dollar yen to some extent, that these are the pairs that I was focusing on. So I knew that I am looking for short entries only. So because I'm only looking for short entries, and I like to use an RSI which gives me multiple time frames on my screen. So here you can see I like to use the 40 as an oversold level and 60 as an overbought level. Here you can see uh, right on 7th is when all the RSI, right from H4 to daily, H4 and daily was already in a downtrend. You can see it was already trading below 40, and there was this H1 which again started to move down. So typically on the 7th of December, I saw that all the RSI on all time frames was going down, right? And this is the day when I had a very clear indication that yen had kind of aligned. So there was yen was really strong across all time frames, and that's what I like to see. I like to see that when a currency is strong, in this case the yen, it has to be strong on the monthly, it has to be strong on the weekly, daily. That's when you get really clear moves. And since I'm looking at a longer term time frame, I know that this is the currency that I should be focusing on. So instead of looking for buying, where typically when RSI gets oversold, you look to buy. Here, I was not at all looking to buy. I was simply looking to sell, because I knew that this is going to continue to go down. The reason being, this is the day when yen was in perfect alignment and all the yen pairs were crashing. In fact, this is the day we can show you on our Telegram channel. We had updated this. You can see here, this is the 7th of December. So this was way in the Asian session. We had seen that yen was really gaining value, and all the yen pairs were going to drop, and that's what happened. So typically, anybody who would have been looking to buy, when RSI goes below 30, they would literally lose every trade or probably blow up their account if they didn't have a stop loss. That's what would have happened, or maybe you would just have to book a very big loss. So you can ignore this. This is basically the alert that I'm getting from my system, which tells you when a currency is really strong and weak. And you can see right now, we can clearly see that there is some action happening on the dollar. I will look at that later. But all in all, I just wanted to tell you that, just looking at RSI as 70-30, 70 being overbought and looking to short, and 30 being oversold and looking to buy is not really the right way to look at RSI. Especially in forex trading, you should focus more on identifying which currency is really moving the market. Identify a trend. If there is a clear trend, then you can look at overbought and oversold. In this case, euro yen was in a clear downtrend, so you can see just one trade at the start of the month would have given you 300 pips. And because you know that yen is going to continue to go up, and because yen is really strong, what would have happened, you can see here, uh, over the next 24 to almost 40 hours later, RSI went above the 70. So this would have been a good area for you to look for a short entry. Why? Because you know there is a clear downtrend. You know that yen is dominating. And now that in a downtrend, you are looking at an overbought RSI above the 70, this is a good indication that you can look for a short entry. Now, typically for me, this would be probably an aggressive entry, because you know that the overall trend is down. Or you, in my case, I will simply wait for my other indicators that I use to fall in place. Typically, I use a CSM indicator as well. So you can see here, this is the yen. This is where yen got oversold completely. Then the RSI again came back above the 70, making it overbought. So this would have been an aggressive area to short, because you know that there is a clear trend. And then of course you can see here when yen again started to gain momentum, right? That is when you would have seen all the yen pairs drop again. So here you can see this one simple trade would have given you around 300 odd pips, and another entry, because there's a downtrend, would have given you another 200 300 pips. So just by taking two trades, by simply identifying which currency is dominating the market, by clearly identifying the trend, just by taking two trades in like 15 days, you would have ended up making around 300 to 500 pips easy, right? So my point is that if you're using the RSI, maybe you should just change your perspective. The typical way of looking at 70-30 is not really the right way to look at it, because like I said, it simply follows price, right? So for you, it is very important that you identify a clear downtrend or a clear uptrend, and then you can apply 70 and 30, depending on which direction you are trading. Otherwise, the best way to really look at RSI is, like I said, identify a trend, wait for, in this case, there was a clear downtrend. You wait for the trend to complete, you wait for an overbought signal, and then you can look for a short entry, right? And like I mentioned, like you have to be careful that sometimes these indicators just tend to go in one direction. Like on the 7th of December, we had identified that yen is very strong and all yen pairs are going to drop. So you can see anybody who would have probably bought here and did not have a stop loss in place was floating in around 250 negative pips, right? That is a lot, and you can see the trade is not yet recovered at all. The reason being, yen is very clearly dominating, right? So this is just a quick video. I wanted to talk about RSI and the way I use RSI. I don't use the typical approach. And I know a lot of you have emailed me and sent me DMs about the indicators that I use, especially this one that is on my screen and the CSM that I use specifically on my templates. Please understand that these indicators I've custom coded for myself. So in case if you are really interested in these templates, or if you really want to learn more about the strategy that I use to trade, then I highly recommend that you can send me an email. I have left my email in the description, right? You can send me an email. I'll be more than happy to respond to you. And I'm really looking forward to probably coaching students one-on-one. So you can send me an email. You can tell me what is it that you are looking out to do in Forex trading, and I'll be happy to help you. Okay, so I hope this quick RSI video helps you and changes your perspective that RSI is just not about 70-30. There's a lot more to it. All right, I'll see you in the next video. Thank you. Bye bye.